Welcome viewers and traders all over the globe to our today's insightful journey where we will bridge the world of commerce and finance. In today's video, we will delve into the fascinating parallels between distributors and retailers in the business realm and the forex swing and day traders in the dynamic world of currency trading. Join me as we uncover these similarities, the differences, and the invaluable lessons they offer. Let's dive in straight after the intro. Welcome back. So, I will begin to differentiate between, just for the layman and those new to forex trading. We know about distributors and retailers in the business world. Distributors and swing traders are likened to each other, while the retailers and day traders are likened to each other. For distributors, they usually buy products in bulk from manufacturers or wholesalers and then sell them to the retailers. So the swing traders are actually doing same in the forex market by buying currency with the intention of holding them for a long or short medium time period, which usually run across days, weeks, aiming at profit when there is a swing in the market trend. Similarly, for the retailers, while they sell product directly to consumers, often in smaller quantities and at a higher price, day traders in forex, on the other hand, would buy and sell currencies within the same trading days. Mark the word same trading days. And for the purpose of making profit from short-term price movement. So both retailers and day traders rely on quick turnovers and volume to generate profits. Now, having drawn this comparison, we would try to see what is that commonality between the swing traders and also the day traders. The one common line between them is that both are out to make profit. It is only the strategies that varies. The same way the distributor and retailers in the other world both also aim at making profit, but with different strategies. Now, back to our own main interest, which is the forex trading. The very common thing, the thin line between the day trader and the swing trader is actually that profit making. So in today's video specifically, I want to remove this myth. I say, I am not a swing trader because I don't have that volume of money. I am just a day trader. Things like this. I want us to clear this mind and just look straight on that common thing between the two of them, which is actually making profit. Now, I'll move to stage 2 of this analysis, of this clarification. What is it? What is that common thing that both of them depend on to actually make this profit in forex? It is the price movement. And this price movement has a link to, we look at price movement, we look at the time frames. As we said, for the swing traders, they trade usually they take days, weeks, especially when they analyze the market technically and with maybe a forehand information of the fundamental news that is going to happen. They would project where the price is going to move on to next. Then they place their order accordingly, either a buy or a sell market. Then for the day traders, what they do is that you're seeing my chart here. They come into the market. They come into the market, and what they do is that they look at what's happening, what's the trend of the market here. This is the first thing they look at. Let me take it to a higher time frame. What is the trend of the market? Okay, this is top down. Then where can I take opportunity? This is a live chart from GBP USD. What type of opportunity can I take? So this is it, and at the end of the day, it is still the price movement. It's the price. Let me go lower. It is still the price movement that tell that, okay, with this price movement I have to sell, with this price movement I have to buy. Now, we've often said, and also in some of our videos I also mention it, that if you are not an expert trader, don't trade the lower time frame. Don't trade the lower time frame below 15 minutes because it's noisy. Yeah, we've always said this. But because the purpose why we go into the market at any point in time is to make profit, is there possibility, are there possibilities for us to also make profit despite we are in the lower time frame? So this is what I want to share with you. Then you will build it on your own. Find a way how you relate this. Either you are swing traders or you are day traders. The common purpose of trading is to make profit using the price movement. So let's see how we can, what are those guiding rules that can help us whichever way, whichever area we find ourselves, to make sure that we are making profit from marketing. Now let me start with the swing traders. Swing traders, this is for you. Swing traders would say that these are those traders that have some good capital, that they don't mind when they place their order. The stop losses are usually wide, they take profit wider. Let's say they want to do 1-to-2 reward ratio, then it's going to involve huge capital to do this. On the other hand, for us, the that usually go on day trading, we would like to tighten our stop losses so that the price movement will not have any much impact in us. But there are some other concepts I would mention. Let me write these ones down because they are things you will need to pay attention to. In some of our videos, we've talked about engulfing candlestick pattern. This is one. Then I would like you to pay attention to what we call the order blocks. Then I would also want you to pay attention to, I will explain these concepts I'm writing down. I will also want you to take fair value gaps. Okay, the engulfing candlestick pattern, the order block, the fair value gap, and okay, let me say swing points. Sorry. Okay, that went off. Let me write it again. The fair value gaps. Then maybe as a bonus, swing points. So if you have not worked our fair value, our engulfing candlestick pattern, please scroll through the channel and watch the full video on engulfing candlestick pattern, how to trade that strategy. Then the order blocks is something I'll be introducing you today. The fair value gap, I might have mentioned it somewhere, but I would give a little detailed explanation of fair value gap. We will be doing a video on this separately in the future, but I want to combine it to the idea, the concept. The bottom line is that at the end of the day today, it should not matter to you whatever time frame you are in, be it 5 minutes, 15 minutes, or you are looking at day, week, or monthly trading. So that is the objective of this. At the end of the day, this is what you should be able to go back with. And then we will do some playbacks here to test this out at the end of the video, and then see and take the trading from there. Okay, so engulfing candlestick pattern, as we said, if you look here, you have one here already. An engulfing candlestick is a candlestick that form and engulf completely the preceding candlestick. What do I mean completely? I mean 1 minute time frame. This candle, let me do something. Let me show us engulfing in action. I want to show engulfing in action if I can do it. Okay, now I circle the candle before this big candle. If I move, engulfing means if I place this candle inside this candle should dominate it. You should only see this color. You should not see this. How do I practicalize this? Let me switch to 5 minutes and see. The 5, what time is this one? This happened 3:29. So by 3:30, the candle that formed from 3:25 to 3:30, the 5-minute candle that formed to that point would engulf these two candles, which means you will hardly see any trace of green in that candle, 5-minute candle. Let's switch here. Okay, so inside here you can see my yellow line. I marked it out, but the green candle is gone, which means this candle is the 3:30. This candle formed 3:30. That candle we talked about is inside here. Okay, I just try to use this illustration for you to understand what we say when we say engulfing. What are we actually talking about? Okay, similarly, if I do, let me go higher. I go to 15 minutes. Now, in this 15-minute candle, this from 3:30 to 3:45. Okay, I have some engulfing here. Let me go higher. I want to yes, good. This 1 hour candle formed from 3 p.m. From 3 p.m. to 4 p.m. this candle formed. In between this, if I use this candle alone, let me do the same thing I did before. It has engulfed a lot of candles, but because you could not, because the candle is so big that it engulfed those other ones, you will not see them. So this is the, let me now, if I step down to watch within this yellow circle, if I step down to 30 minutes, you see this candle, these two candles were not visible before. So this is an engulfing candle to these two candles. Okay, this is an engulfing candle to these two candles. There is a reason why I'm explaining this engulfing in details, because it's the foundation stone to which I will explain this other stuff I'm talking about. Then if I go to 15-minute candle again, you will see that 1, 2, 3, 4, 5 all were in this 1 hour candle that I showed before. So this is a very strong engulfing candle, Now, as I said, if you go back to our previous video, you will understand the concept of engulfing. Engulfing candle can be one just straight candle. It can be a combination of candles to engulf. Like in this case, there is an engulfing candle here. This green candle engulfed this red candle going up. We are in 15-minute window. If I switch it to, let's see. I want to repeat this and see what happened if I combine these two candle. Then I go to the next time frame. If it's high, okay, the next time frame becomes green, which means this has engulfed. Engulf means swallow. Simple term, swallowing candle that swallows the candle before it. So this is what we mean by engulfing candle. Now that we understand engulfing, if you want more details on engulfing candle, go to engulfing candlestick trading pattern, and then you will understand it more. As you see more example there, and also how we use it as a standalone strategy to make market decisions. Now we go to order blocks. What is order block? Okay, first of all, before the order block, why do we have engulfing candles? If you look at my opening to this video, I talked about retailers, I talked about distributors, I talked about swing traders and stuff like that. I brought the concept of engulfing candle to also explain the power of the swing traders. So just like the the distributors that would hold some stock for a very long period of time, determine when it's best to release to the market to maximize profit, the swing traders would, for example, after analyzing, go into the market. It is part of their strategy. Let's load the market. They go into the market in full force. In this case, they had come with their capital to sell. they entered the market at this point. There was a non-farm payroll happened here. So what they did was that they pushed in capital to sell and push the price. We observed for some few days the market has been volatile, going up and higher high, forming new higher highs. And what they have done here is that, oh, let's break this. Let's find a way to make profit. Then they push capital into the market to push this value down. Now that they have done this, what happened? They create automatically, there was an order block, and then they create a fair value gap. I will explain this concept within this this place. Let me move these ones away from here so they don't interrupt us. Please pay attention to this. If there is a portion you don't understand, watch it over and over again. Follow us to the end. When we apply, we do a replay. Go back and do some back testing to see how these points actually played out. Now, if I look here, I said we have the swing traders, or the big guys in the industry, those that have good capitals, came into the market here, and then what they did was to push the market downward. By pushing the market downward, it created a fair value gap, which is I'm taking this out now. I've used it to explain the concept I want to explain. You understand it now. Engulfing can do. What is it? What is the fair value gap, and how does it relate to us making money? Fair value gap usually involve three candles: candle A, candle B, candle C. Candle A would be the order block, candle B will be the engulfing candle, and candle C will be the candle that actually created the fair value, considering measuring from the order block. So candle A, let me mark it out. Candle A here, which is this one, would be our order block. Then candle B, which is this one, is our engulfing candle, and candle C created the fair value gap. Candle C created the fair value gap. We actually call it, you can shorten it for FVG. Okay, if you see FVG somewhere, what it's referring to is fair value gap. Now, what is this fair value gap? Fair value gap, you could see that every candle has a wick. A wick. This wick, that is this line, sometimes it's long, sometimes it's short. It is called the wick. Every candle has a wick. But every candle has a wick, and some do not have, which, for example, if you look at this, it does not have a wick, which means its wick is also the same place as its body. Its wick is the same place as its body. And when it happens at both ends, we call it the Marupuzo candles. So candles without wick, they also create fair value. Look at it here from the other block here. There's no wick at the bottom here, but this also has a wick. Now, to define the fair value gap, it is that gap between the candle A, which is the order block in this case, and candle C, between A and C. The middle one you ignore. So, which means if I am to mark out the fair value gap zone here, let me use this. The first point here is the body itself, straight. Then, and the second one is the edge of this candle C here. Let me differentiate this a little. Let me fill it. Okay, so this distance we are seeing is actually the fair value gap. Why do we call it fair value gap? Fair value, there should be connection between every candle, every other candles in a chart, and where you have two candles that does not have a connection, then it creates a fair value gap. Let me show you another one, very close one. If I look at this point here, this candle A, candle B, candle C. You see that the wick of this and the wick of this is not connecting. So if I'm to mark it, I would do like this again on the straight line, then come here. So this gap is a fair value gap. You can see multiple of them. This is another fair value gap here. It has its own, this is candle A, candle B, candle C. In this case, this is another fair value gap. Okay, fair value gap. And so on. When we do the back testing, we will add it to it. We will show how we can take advantage from fair value gaps. This is another fair value gap here. Okay, so I would stop here because if I want to mark, I can mark 1001 fair value gaps here. So in what we are explaining, let me go back. What we are trying to explain here is that between the order block, we have an order block. Look at the combinations here. We have another block. We have an engulfing candle. We have a fair value gap. Okay, so when these three combine, it gives you a very strong tool to like consider that, hey, this is a perfect one for me to do to actually look for a market entry. Now I want to combine these stuffs together to now tell when do you actually take a trade and when you do not take a trade. Remember in one of our recent videos, I think either the last 2 weeks thereabout, that was sometime in March, we talked about the trend line strategy, where you use trend lines to actually, we talked about a trend line be your friend, trade with the trend and things like this. So first thing first, and as I said, it doesn't matter. It also does not matter what time frame you are in. The first thing you look out for. Now I will give you, let me note it down. I will give us a set of rules to actually use how do we combine engulfing candlestick, order blocks, fair value gaps. Okay. The first thing is for you to identify the trend. Text. Now, this is the rule. 1, identify a valid trend. There are several ways to identify trend. The easiest one is if you use your trend line to determine top down, as long as it's not horizontal, if it's going diagonal, down or up is trending. So identify a valid trend, and there are other confluences to actually identify a trend. I have not talked, I think, did I talk about this earlier today? No. You could use the moving average, the 50 exponential moving average. Let me see, where's my indicators? Let me see if I can fit in one. Then we use it as a dynamic. It will determine for us what trend we are in, either up or down. You can use the exponential moving average. You can use the relative strength index as well, RSI, to also tell you. You can also use the MACD. Whatever it is you use to you just need to confirm that you are in a trend. Let me leave it. You just need to confirm that you are in a trend and it's a valid trend. Okay. Now, step 1 is identify a valid trend. Step 2 is to look for an engulfing candle. Step 2, look for an engulfing candlestick. Pattern. So this is 2. We need to look for an engulfing candlestick. Okay, sorry. Point 2, look for an engulfing candlestick. So when you have an engulfing candlestick, 2 of the rules have been satisfied. Then you look for a fair value gap. Okay, Yes, you look for a fair value gap. That's point 3. We'll go through it one after the other. Point 3, look for a fair. Okay, now I will use just the short form FVG. Look for a fair value gap. Then when you get your fair value gap, the next thing now is for you to look for your entry position. For look for a perfect entry condition. Perfect entry condition. Again, if we have done something or we've done a video on this, on the set strategy, where you search for your market, look at the market condition, you take your entry position, put your target, set your take profit target and also your stop loss. Go back into our channels and look for that. It's also explained perfectly how to make an entry, what conditions must be satisfied for you to take a perfect entry. Then look for a perfect entry condition. I will explain the condition for this strategy. I just want to write down the points. Then the last one is your take profit. Last but not the least is your profit and exit, your exit. Yeah, let's call it exit target. So this is either a profit or a stop loss. Okay, so this combined is actually the tool that we need to do this. Identify a valid trend. Let's apply this before I want to do it on this screen now, before we now do a replay. Go back into this history and then take a replay of some of the markets. Remember that this is GBP USD 30-minute time frame, and it is still a live market. The market, if you look at it, the market is moving. Okay, now, and it started moving since I joined the market, so it will not be as if I did something different. Okay, I think I should have just placed a trade based on this tool. Then by the end of the video, we'll just go back and see how the trade worked out. By the way, I didn't start that. It will elongate the video if I had to hang you on now and take the trade, but I will explain it and let's see how it works. Okay, identify a valid trend. In this 30-minute video, if I start from here, you will say, hey, you didn't mention the swing point. This is a swing point where you had a turn in trend. It's called a swing point. If you look from here, the trend was going up, then from here it begin to come down. So there is a swing point. I don't know where this one starts from. I could say from no, yes, this starts from here. This is a swing point. Then it begin to come up, and from here it turned again, started coming down. So I would use from here to here. So I would say that we are in a downtrend. Let me join the swing points. We are in a downtrend. Okay, it's within this channel. We are in a downtrend. Now look for an engulfing candlestick pattern. Engulfing candlestick pattern. Remember, we have one here. I wouldn't want to come and use this one because already we had one here. When this market, okay, this does not have a fair value gap. We had an engulfing pattern here. Good, we have an engulfing pattern here. Okay, look for an engulfing candlestick pattern. We have one here. I'm going to take this. I will mark this engulfing candle. These two combined actually engulf this. Let's validate it. As I said before, we just join the candles together, move to the higher time frame. If you cannot see the color candle there, then it's engulfed. Okay, now if I move to the next one, which is let's say 1 hour time frame, The green is gone. So that's actually a valid engulfing candle. There is an engulfing candle here. Let me delete that. I don't need this again. So there is an engulfing candle here. This candle engulf this, because if I do these two, you will see still the same color, and these two combined is stronger. It engulf this. Now between this engulfing candle, which is here in this our own case, there is the candle before it is the order block. In this case, this is our order block. I would mark it. I will mark our order block. Let me use this to mark the order block. This is the order block here. Okay, let me adjust it. This is the order block. I will talk about it, why it is necessary. Now, between the order block and the next candle, there is a fair value gap. Here and this one, there is a fair value gap here. Oh, sorry, this is not how I plot it. I said between these points and this one, okay, there is a fair value gap. Now let me fill it with a different color, because it is time to use it for fair value gap. Red. No, let me use a different color. Let me use blue. Okay, so this is the fair value gap, and what I also want to do now here is to extend this right. I extend it right. I want it to flow through, so that you can understand the strategy, what I want to do with it. Remember, this color blue, let me put a text in it. Text, this is the fair value gap. Use a white. Fair value gap. Okay, top left, no, put it in the center, inside, bold. Okay, so this is the fair value gap. Now what do we want to do with the fair value gap? And it is a fair value gap that preceded that follows an order block. What was the third one? And we have an engulfing candle. Okay, so these three combined, what we now do is to look for a perfect entry condition. Now these four, I'm going to explain the details now. The catch here is that when you have a fair value gap following an order block, what usually happen is that the market would go. Again, what happened here is that people that have the money had come into the market, they pushed the market down. But for this to continue, the market is going to come back into the fair value gap zone or the order block zone. Okay, so to enter this market now, I will not I should have taken a trade. Look at how far the market has gone. Come on, guys, be patient. This market is going to come back into the fair value gap zone or touch the order block zone before it continues the main journey. Okay, the sell is going to happen, but it's going to be more where after it comes into this fair value gap zone or the order block zone. Usually it comes into, for me to take a sell trade with this now, all I will do is that, remember I marked the swing point here. What I will do is to wait. That this market, I will patiently wait, because the purpose is for me to make money, make profit, right? It's not about how many trade I take, it's about how many quality trade I take, okay? That will have minimal loss impact. Now, what will happen is I am going to take a sell from this region once it touches this 50 or above, and I'm going to position my stop loss here. So if we are looking at the 30-minute window, if this is supposed to be a monthly chart or a weekly chart or a daily chart or even a 5-minute chart, The same thing, because when I'm going to do the back testing, we're going to use a lower chart. I think I also like to use a more volatile currency pair, so that we will be able to together watch it live and see how this strategy plays out. So to take the market entry here, is that my stop loss is going to be above this swing point. Okay, I mentioned swing point here. It's going to be above this swing point. Then my entry will be above the fair value gap here, above this fair value gap, and then or possibly it might touch the other point before I take the trade, whichever one within the other block and the 50% above fair value gap. I'll do my sell entry. Then once I take my sell entry, my take profit target would be towards the last depth it turned before the swing. This is another swing here. There is a swing here, there is a swing here before it turned inward. Now, however, you could also use another psychological tool, which is the Fibonacci retracement, starting from this swing to this swing low. Okay, sorry. Yeah, to this swing low. Let me read it the other way. What's happening? Let me re-enter it. I wanted to, so that the reading will be the other way around. Okay, these are the swing points. I have 0, 5, 1. Okay, good. So here it came down here from this swing point to this swing point. What I'm looking is already currently at 618. What I am saying is that I'm looking for the entry around the 0.23. Okay, that is reading from top down. If I read the other way around that I draw it before, if I read from this way, I'll be expecting it at the 0.78 Fibonacci level. Okay, the 0.78 Fibonacci level is where I will take my, it can be 0.78, it can come up to even this point. Then I will take my sell from here. This market is going to come there. It might take time, but it will come there. So when I do this, I will now place my stop loss above this point 0, the starting point 0, just some levels above it. And then we will, if we save this video, we'll take a screenshot of this. You can take a screenshot and watch this trade till the end of today or sometime next week or thereabout, and then come back to put your comment on the comment section how this played out eventually. This market is going, we've already saw a swing here, is going to come all the way. It might not be coming straight the same way this one comes straight. It might, do some trace back, pull back and stuff like that. Currently it's trading within this channel. Okay, you saw here at the midpoint here, it get to the midpoint, pull back, midpoint, pull back, then it breaks it here, come back again, breaking it up now. It might pull back to it, come here, and it might eventually break this and go into the zone. So this is it. My sell will be within this region. This is where I will take my sell. Now so first of all, what we need to do is to look for the trend in the market. Here we could see left to right is in uptrend. Left to right here is downtrend, then uptrend again, and I think formation downtrend already also start forming here. So in that case, we have a swing point here, we have a swing point here, we had a swing point around this area, we also had swing point here, depending on where you are looking from. I think the replay, this took us back to December 2023. Now let's follow our rules and see what we can get from here. As I said, we have observed, we assume we just entered the market and we observe this is in these 4 hours, because we are going to do analysis in the lower time frame than this. Not we just need to observe when we get our structure, then we go down to check when we should take the entry. So top down swing, down up, we are in the up position. Here is consolidating. Let's play a little. Let me change this to 1. Let's play it forward a little and see what we have. Okay, this is still consolidating, sort of consolidating, and okay, good, it went back up again. I think this, yes, this looks like a swing here now. Let's see, higher high, higher low, stop. Here, when we're going up here, it begin to come down again, right? So what we now need to do is to begin to look for our conditions, which of them are met. Or remember, we had a swing here. We had a swing here. This new swing now is actually a break of this structure, because this was the higher high we had before. So this now becomes the new higher high. This is it. And now coming down, we saw that instead of this coming up to break this, it's going down. Let's move some steps forward again to confirm that it's actually now in a downtrend. Good, it's now in a downtrend. That's good. Stop. Now a new structure has formed. Now the market has turned and is now in the downtrend. So what do we look out for when we have seen this? We talked about the engulfing candle, which is the first one, and the engulfing candle is a momentum candle, the strong momentum that comes with strong momentum, and it is better when it is followed with a good fair value gap. So we saw one here. There is an engulfing candle here. These two combined engulfs this. As I said, I showed you how to check if it's engulfing or not. We will check for the value, but for the purpose of this one, let's check that I join from here to here. I make sure the candle is covered, right? In this, the green, we have a green candle here, up here. Then we go to the next time frame, higher time frame. We are in 4 hours analysis. Then if I go to day, are we able to see, check if we are able to see that where is my, it swallowed, still in December. I think it swallowed here. The funniest thing is I'm not seeing my my marker, but yes, it's inside here. So it's actually an engulfing candle. It's engulfed in there. Now, having said this, haven't done this, let me check again if I can extend it back a little. Haven't checked this and we saw that it's engulfed. Then the next thing we need to do, okay, you see, it's inside here. The candle is hiding inside here because it was not completely a day before. So meaning all the green candles here is there. So there is an engulfing candle formation here. Now, the step 2 is for us to look for a fair value gap. I'll take this out. Yes, we had a fair value gap. These two green candles created a fair value gap. First of all, this green candle itself is the order block, as we explained, is the order block. Then between here and here, we have the fair value gap. Between here and this way, between here and here, we have the fair value gap. What I am looking for is that for this sell to be valid, for me to take advantage of this sell, this is my first engulfing candle here. I will look for another one here. As long as this order block is not broken, I'll look for another one to take a sell. Remember, the wider the fair value gap, the stronger the probability of you winning a trade with that. Again, I think I see similar thing here. Whatever I explain here would also apply to this place. I'm just seeing one here now, because we had a downtrend, we had a swing here, we had this becomes the other block. I'll combine the two. This becomes the other block. Then we also had a fair value gap here between this and this point. Okay, we had a fair value gap here. What I am saying is that we would expect for me to take this as a valid buy signal. This market will go, it will come back into below this or into the other block itself, but not close beyond. If you close beyond it, the setup has failed. Okay, the reason why you have to wait for this entry confirmation is for you not to lose your money. If you rush to enter market and then you did not wait for the condition to be met, then you get knocked out. So there is a setup here looking for a buy, and within that period, I was always able to detect a setup looking for a sell. Now let's play this and see what plays out. Okay, here remember, I'm looking for this market to come back into here strongly, then for the sell. And here I'm looking for this market to come back here strongly without breaking the structure to take a buy. Let's see which one comes first. Yeah, and now because this is approaching this, as I said, what you do, because you have to step down. Now I go to the 1 hour time frame, because this is where I'll be able to see the behavior of the candlesticks and take my right market decision. Remember, for this one, this is where it started from. Look at how long it takes. Let me minimize this so that we can have a good view. Okay, now the market is coming towards here. Remember, I said we will take this trade once it's below this midway down, or it touches this, but not beyond this. Now let's continue the play back. Continue. We wait for it to break this, or at least touch it. Comes towards it, and what we'll do when that happens is for us to take a buy. Now this has not happened. It also come back into my setup here. Remember, I'm looking for a touch of this or breaking this one. Okay, so either it touches this break, I need my entry will be within this zone. Okay, good. Now let me pause it. Is it paused? Yeah. Now I have seen valid entry decision here. Okay, I need to make my entry, but before I take this entry, I need to be sure that there is also another engulfing. The same conditions that I used to mark this would also happen here. I need an engulfing within the other block. For this one, the other block, this is the other block in red. I need an engulfing candle within the other block to take this trade. Let's see. Let me increase the speed, playback speed. It's faster. Good. It breaks it here. It breaks it here. Okay, this setup has failed. It breaks it. When it come in here, if I take the sell here, it would have come to knock me out here. Okay, this is the point I want to mention here. If I take it here, if I said okay, it's within the other block and I take the sell, then the sell strategy here is for us to enter here, and then where it was created, you put your stop loss a little above it and your take profit target to be the point below it, the swing point below. So if I had taken a trade here, what would have happened? It has not reached my take profit. It reversed back and then hit my stop loss here and take me out of the market. So this is why it is very, very good to be patient. Okay, very good to be patient. Make sure you have there is an a strong in the 4-hour time frame. Go back. Okay, if you go back to the 4-hour time frame, you see that there was a strong engulfing sell here for that to happen. Let's continue the playback. Let's see which one will execute first, either the down or the up. You see, it came back twice here. You see. Now, if let me pause this. Let me go back to the 4-hour time frame. Now, within the 4-hour time frame, let me play. I'll take this one out. I'm looking for another setup. The fair value gap here has been filled. Looking for another setup. No, filled again. You take your patience. As I said, it works in any time frame. So the market is consolidating here. It needs to break this structure for it. Now, okay. Pause. Two things happened here now. One, when you see this consolidation happening, it eventually broke here. So when it broke, there is a structure here. There is a fair value gap here. A new order block is sitting in here. Then we will wait for the test of this to come into here. If I play this further, is within the order block. Let me pause it and show you. From here, within the order block now, we begin to have the market come back into the order block. So what we are expecting is that there should be no candle close above this order block till we have the next engulfing sell. So once we see the next engulfing sell, then it's going to take us down to this region. And also remember, here we also had a buy setup here that we're still waiting for confirmation. And here this looks like a confirmation to it, which means here it came back into the order block. We had another engulfing going out. So this should actually take us into here. This one is a valid entry for. If I go to the 1-hour time frame, what does it look like there? In the lower time frame, when it came down here, you had it came back into the block here. You had a buy, you had an engulfing candle out of here. It is retested here, so it's going back up. If we continue the playback here, we'll see that this should go up. Look at it. It went up here, and let me pause it. What would have been my take profit target with that? The take profit target for this one is the next swing high. The next swing high, and the next swing high is within this zone, right? So we would assume that it is here, which means it has not finalized. Maybe this is a test back into this region to confirm a strong exit. Let's continue. So the target is up here. It should actually come up to 1.27706. As long as it didn't break this order block, it's going to come up to this zone. And of course, considering how much this would have given you, you might have exit strategy 1, 2, and 3 that would have taken you out of the market before this further. So you see, good. This is the point. It has hit the take profit target that we're talking about. So this is the take profit target for this. Now, this meaning the setup. There are two setups. Sorry, there were two setups we did. One failed and the other one executed. The sell setup did not work out. Let me take it out. The sell setup did not that there were a lot of profit making opportunities within within that, but it did not fulfill our condition, hence we left it out. The one that worked was the buy setup, because it fulfilled our condition. It came back into the zone, passed beyond 50% of this, and then it went to our take profit target that we set for it. So this, after the take profit target, it can decide to swing again. You have done your side. Again, fair value gap, another one found here, it failed because it came back to break it. So this is not valid. Take that out as well. And what other thing here do we have? Still in the 4-hour time frame. Something interesting also happened here. Let me see if we can take advantage of this. Here you had an order block buy. No, this is for a buy setup. It failed immediately because the order block is broken here, so you can't consider it. Then let's move. Okay, it's taking us to where we actually had our setup earlier. Here we had in the 4-hour time frame, we have another order block here. It has its fair value gap somewhere here. Then if we go down to lower time frame, what are we seeing? If this is where we're reading from, then this also has failed. It has failed the other block. Then let's go to let's use another it's a far lower time frame. Let me remove this so that they will not affect our visibility. So irrespective, it depends, irrespective of which block you are looking at. You're looking at weekly window, daily window, or 1 minute, whatever it is. Let me change this to another volatile. Ethereum BTC, Ethereum USD. This is volatile. Let's look at Binance, for example. Okay, this is another volatile one. Now let's do a replay here. This is let's cut it here. The market here, 15 minutes. So we'll do analysis in 15 minutes, then we'll go back to 5 minutes to take the trade or something like that. If you look at this is top down. We had there is an engulfing here. These two green were engulfed down here. We have fair value gaps here. Then that fair value gap should be filled up somehow. Okay, or if I take, okay, let me play it a little. Let's look for a valid place to enter the market. I could still use this one. I need a straight one where we had one strong engulfing instead of combination of candles, so that, let me see. Good. There is a strong one here as well. Let's move forward a little. I need just one engulfing where we can have a strong order block, not combination. Not combination. This is towards the end of, okay, yes, this would, I'm looking for a perfect entry opportunity. Yes, this is looking like one. Let me see. Yeah, this is looking like one. Oh, it already came for it. Okay, it's looking like one, but it already came for it. Let's look for another one. I need a strong engulfing can do to make the decision, strong one that has good momentum, a sample like something like this. Because, okay, let me pause it. If I want to use, I could use this to do the analysis, right? That we had the market moving up. Let me take it to 1 hour if I can see it in 1 hour. Okay, yes, there are a lot of them here now. There are a lot of them. Let me take the most recent one. This one. You have an order block from here. You see, this is another block, right? Then from this other block, a fair value gap is created, which is fair value gap is created. Fair value gap is created here. I would wait for this, for me to take a sell here. I would wait for this to come above this place, within this place. Then give me another sell, a strong sell. With that, I'll take my sell. Let me increase this now. And the condition is if you didn't get it and you have another candle close above this, it fails. So you don't waste your money. Let's watch. It's coming back. Now, here, since it's coming back here, I need to switch to the next lower time frame to see when it's going to be within here. In this case, let's go to 15. Then we play again. It came here, it didn't close above it. I'm not convinced. Not convinced. So you wait for it. Oh, good. Then we at the end. What's this date? This is okay. We are at the end of the chart and we have not seen the opportunity to take the trade. This market is going to come back in here. Once it come back in here and it form another engulfing going down, then you take the sell. You would ask that why didn't I take the sell here? When it got here, I'm not convinced enough, because what I need to do is that if I take the sell, my take profit target is the last swing point. Okay, the swing point before this thing turned. So I had here to here as the full length. Then from here it come back here. I think this is the entry, but I'm not convinced enough, so I leave the opportunity. I will wait for it because it might still come back into this place for me to take that trade opportunity. Why do I need to patiently wait for all this to happen? Because if I wait for it to happen, then my stop loss will be tighter and I will not lose much in case the market go against me. So let me go back, take this out again, go back. Now let's cut. Sorry, it didn't work. Let's cut here. Market is downtrend. Oh, 15 minutes, sorry. Let's go to 1 hour. We analyze in 1 hour, go down to 15 minutes to take the trade. Market is downtrend. There was a swing from here to up, then it's beginning to come down. Market is downtrend. What are we looking for? We are looking for an engulfing candle that would have an order block and then create a fair value gap. Go down, play, closed, fair value gap. This look like one. We closed again. Okay. I want to take a sell. market. Oh, there is actually one. There is one here already. There is one here. This one, there is a fair value gap here. So this is the other block. Then this is the fair value gap. So we wait for it to come in here. Okay, go to 3. When it comes in here, this is the high, this is the low. Our profit target will be this point. Now play. It didn't come back there. Let's continue playing. Let me increase the speed. The fair value gap is still not closed. So which means, pause, it formed a new low. So this will be my target instead of this place if eventually it comes up here. If I see the entry, it's going close to the place, it's turning back again. I'm waiting for it. Again, this did not hit the fair value gap is still there. So, and one day it's going to come back there. I need to move far. Let's go to last year, for example. I need to move further. There is one fair value gap there. It's going to be filled. So this has, now what I need to do now is, if I see another setup that will give me a buy, I can do a buy and take my target within this area, because it must definitely come to close this fair value gap that is created here. Okay, this is what this strategy is about, basically. A strategy that would allow you to create a market entry where let me see. Okay, let's do this. Downtrend, change of character here. There is a change here. Then we need to look for a buy. Let's look for buy opportunity. We need another block. There's actually one small one here. Okay. Yes, I see one now. Okay, good. This is one here. There's a shrink point here. There is if you check, you see you see a doji candle here, and then something happened here. You have a fair value gap here. So what we do here is mark this out, the candle length, then put the fair value gap signal, then continue the playback. It has to come down below this, then to take the entry, coming towards stop. let's go to lower time frame, 15 minutes to continue. I need it to come here below this region before I can take a buy. Yeah, it happened now. So it has come in here. It has come to the 50%. So what I'm looking out for now is the entry. I need an engulfing. Once it closes above this candle, if it didn't come below it and it closes above this candle, then I get my valid entry position. You see. So pause again. You see, I said I need an engulfing out of this region. Out of this region now. From here to here, I need an engulfing, a strong engulfing candle out. If I had taken a trade here because it reached here, although my stop loss will be below here, but it's risky. Okay, let's continue and see what happens. Pause. So I got the engulfing I want. I said pause. I got the why is not pausing? I got the engulfing I want out of this place now. So if you see from here, we could say this is another small what was it called? Another small order block inside here, but the combination of these candles engulf it, even though it created another fair value gap, and then this came to close it. So this is the one I want. Now with this, our entry was actually, we started looking for it here. Let me go to 1 hour time frame again. We started looking for it here to look for the perfect entry position here, and then our take profit target would be here. So now that I saw it here, so my entry position is here now, because this is where it closed. Yeah, the next candle after it. So I will place a buy here. My stop loss will be below the order block. Okay, just below the order block, and my take profit is here. So this is my take profit target. Now what we need to, this 1 to 4 reward ratio. So now let's play, continue. I'm still trying to extend it. Yeah, my take profit is hit here. It hit my take profit here. I was trying to extend it for you to see. So it hit my take profit here. If you observe, I placed my stop loss just below the order block. It never come towards that. This is the essence of that patience, that wait to have it closed within. First of all, the candle comes back in here, close after the midline of, and remember, I didn't use the rectangular tool, I used the 2 parallel line with midline to draw the gap, the fair value gap. So when it comes in here, it must pass at least the middle. Then once it passes the middle, you begin to look for an engulfing out. Usually, as I explained before, for every connecting candles in forex trade, the wick of this and the next one must touch. If you didn't touch, no matter how far the market goes, it comes back to find a candle that will connect those wick before it continues its journey. That is actually what we're capitalizing on here, that when this market structure, when you have the order block and then you have a change in the market structure, because a fair value gap is created, until that fair value gap gets filled, then the market will not continue in the direction. Wait for that fair value gap to get filled. Okay, and while waiting for it, when you get ready is when the price come below the midpoint. It comes below the midpoint of the last it comes below the midpoint of the fair value gap channel you created. Then you begin to look for your engulfing buy out of that, which happened when we placed this trade here. And then we got our take profit. Let me fast forward to the end and see how eventually it played out. You see, it broke it eventually, and beyond, a new market structure is formed. And what happens here is you also begin to look for another trade setup that you also follow the same pattern to execute. So this is where we will draw the curtain to this video. And to do that, I would want to recap what we have learned. Push this to the end. I think we started with the Euro USD chart. This is stop the replay. Euro USD, was it Euro USD we started with? Oh yes, I cleared the informations we had on the screen before. But to recap simply, there is commonality between a distributor and retailer in the normal realm of trading. There is similarity between it to what we have in the currency market, where you have swing traders and day traders. The common thing between all of them is actually how to make profit. And to make this profit, you have to go with a strategy, buying and selling strategy. Either you hold the product till when the prices are good before you bring it to the market, or as a swing trader, you go into the market to push the market towards a direction, wait for your technical analysis or fundamental analysis to actually exit your market. And for the day traders, take opportunity of those times that the big boys enter the market to push the market in either direction. Mark your order block, look for a fair value gap, take advantage of the fair value gap. Know that for fair value gap, the price must always come back to close the gap that the market structure has created. You have a new market structure, then it creates a gap. If you are looking at my screen, like here, for example, this is the low. When this is coming out, this is the lowest low. What happened eventually that there was a break here. A fair value gap was created with that as a result of that break, and then you create the fair value gap and wait for it to come in. This is broken. Okay, it filled it here, and then it didn't give you the opportunity to trade another sell. So this is what I'm talking about. Again, another one happened here. This broke up, creating a fair value gap here. Have the fair value gap. Oh, this is good. This is the order block from this one. We have an order block here. Then we had a fair value gap that was created with this, and then the market retraces back. Now it has entered the 50 zone. What I say is, you look, once it passes the midline here, look for another engulfing candle out, and this is an engulfing candle out. There's actually a valid buy market in the Euro USD market as we speak. So you buy this here, then your target will be this high. Okay, this is your take profit target. I would mark this. So because this closes here, you take a buy entry here. Your stop loss should be below the order block. Your take profit should be here. So this I would leave on the screen, but this is a valid market. I would actually love to see how it ends. Okay, the market is trending. I think I'm targeting here 1.08760. If you watch this video and come back to the comment section and tell us if the market actually hit the take profit before it reverses. As I said, this is a live market. I'm going to leave it. In fact, I'm going to take the trade too. Where is my phone? I'm going to take this trade, because trading is all about opportunity. I saw this now, so I'm going to take this trade, inshallah, and let's see how it plays out. So that is where I will draw the curtain for today, with this Euro USD as a bonus one for me. Euro USD buy. I'm going to place a buy market now using the setup on the screen. You buy 0.5, buy, take profit at, I'll be conservative, 108753. 108753. Then my stop loss would be below this order structure. Let me place this here. The 1 hour time frame is where I saw it. The network is bad. Okay, here I'll draw the curtain. I'm going to take the trade. If you also do, or you didn't watch this video on time, but eventually you come across this, do go back to check whether this take profit target was taken eventually or not. Thank you. Bye.